Perhaps one of the hardest concepts for new accounting students is adjusting journal entries, and we meet those guys in Chapter 3. That's where we put our revenue and our expenses into the correct periods using the accrual method of accounting. Perhaps the second toughest thing for new accounting students is the 10-column worksheet, and we meet those guys in Chapter 4. So let's go over exercise 4-1 to see if we can get a good handle on what we're doing with adjusting journal entries and what the 10-column worksheet really is. Our book has a 9-step accounting cycle. The first step is to analyze the transaction and determine whether we make a journal entry at all. If we do, we create a journal entry and we look at what accounts are going up and what accounts are going down. Asset accounts increase with debits, liabilities and owner's equity accounts increase with credits. Expenses are debits, expenses are debits, expenses are debits. The opposite of expenses is revenue, so it must be a credit, and owner's drawings accounts are debits. So we create chronological history of what's happened to us in our journal entries. Then we post those to the individual ledger accounts. In our class we use T accounts to represent those. And we strike balances. So we offset all the debits against all the credits in each account to come up with a balance. Assets should generally have a debit balance. Liabilities and owner's equity accounts should generally have a credit balance. Expenses should have a debit balance, and revenue accounts should have a credit balance. We lay them out in that particular order: assets, liabilities, owner's equity, revenue, and expenses. And we put the balances in those accounts next to their names to make sure that all our debits equal all our credits, and that's called the trial balance. Then in Chapter 3 we learned about adjusting journal entries. So some things happen to us that don't involve cash, and we want to be sure that we get the expenses and the revenue into the right periods. That's called accrual accounting. Once we make and post those adjusting journal entries, we create another adjusted trial balance. Looks just like the trial balance, except now we have a little bit different numbers. Same order though: assets, liabilities, owner's equity, revenue, and expenses. Then from that adjusted trial balance, it's super easy to create the financial statements. Step 8 is about closing out the temporary accounts, the revenue accounts, the expense accounts, the owner's draw accounts. And step 9 is about a post-closing trial balance to make sure that we've closed everything out. So the 10-column worksheet shows us steps 4, 5, 6, and 7 all on one page. So let's look at exercise 4-1. The first 2 columns of the 10 columns is the trial balance. Exercise 4-1 gives us the trial balance, and we have total debits of $7,360 and total credits of $7,360. And we have 3 simple adjusting journal entries to make. A physical account reveals $500 of supplies on hand. So that means at the end of June we only had 500 of this 1,880 left. So that means we must have used up 1,380. So we're going to have to reduce this asset by 1,380. It had a debit balance, so we're going to credit it for 1,380, and we're going to book the supplies expense of 1,380. So that adjusting journal entry looks like debit supplies expense for 1,380, credits the asset supplies for 1,380. The second journal entry says that at the end of the month we still hadn't earned $100 of our $240 worth of unearned service revenue. So this means somebody paid us in advance for some work. We look at our records and we discover that we still haven't earned $100 of it. But that means we must have earned 140 of it. So let's reduce this liability by $140. And let's book the revenue 140. Liabilities accounts decrease with debits, and revenue accounts increase with credits. So now we've booked the fact that we've earned $140 of that $240 somebody paid us in advance. Last journal entry is accrued salaries of $210. That means that our employees did $210 worth of work for us during the last few days of June, but we aren't going to pay them until the first part of July. But since that work was done during June, we want to get that expense into June where we got the benefit of it. So expense or debits, expense or debits, expense or debits. Let's debit salary and wages expense for $210, and let's credit salary and wages payable for $210. So if we look in our adjustments column, we see that all our debits equal all our credits. Does that mean we did everything right? No, but it's a good start. All right, here comes the hard part. The adjusted trial balance. We take our trial balance columns and adjust them by whatever adjustments were made in the adjustments columns. Nothing ever happens to cash in the adjusting process, so that's always the same. In this case, accounts receivable are exactly the same. We didn't make any adjustments there. Supplies, on the other hand, went down. They had that much of a debit balance. We credited them for 1380, so now we only have 500 left. And if you look at the first adjusting journal entry on page 187, it says the physical count reveals $500 of salaries on supplies on hand. And sure enough, that's the balance left in our asset supplies. Accounts payable, nothing happened there. It's a credit of $1,120. Salary and wages payable had a zero balance, but now we've credited for $210, so it has a $210 credit balance. Unearned service revenue had a credit balance of $240. We debited it for $140, so that means that there's only $100 left, and that ties to the second statement. $100 of unearned revenue is still unearned at month end. Nothing happened to the owner's capital account. It had a credit balance of $3600, so we'll credit it for we'll keep that $3600 credit balance. Service revenue went from $2,400 up because remember we earned $140 of that unearned revenue. So it had a $2400 credit. We added a $140 credit, so it's up to $2540. Salary and wages expense increased. It was $560, but we added that $210 of wages that were earned near the end. So now it has a debit balance of $770. Our miscellaneous expense, no adjustments were made, so it stays with its debit balance of $160. And supplies expense had a zero balance. We've now debited it for $1380, so it has a debit balance of $1380. Look at the bottom here, you see that all our debits equal all our credits. So now we create our income statement, and that's the elegance of this system. All we have to do is look at these last few columns here, last few rows, excuse me, and we can see all the data we need to create our income statement. Our revenue account is 2540. Our salaries and wages is 770. Our miscellaneous expense is 160, and our supplies expense is the 1380. Now, do these balance out? No, they don't, and the difference is our net income. Since our revenue was greater than our expenses, we made money. So to make this thing balance out, we'll stick $230 in there, and that's our net income. I got that by taking that number and subtracting those three numbers. So it takes $230 to balance. Hopefully, we'll need that same thing as a credit in the balance sheet column. So, the income statement is created by looking at the last few rows and then balancing out the debits on the credits column with whatever net income we made or net loss. Balance sheet accounts are all up here at the top. All we have to do is copy these over. We have 2320 worth of cash. We have accounts receivable of 2440. We have supplies of only $500 left. We have accounts payable, that's a credit balance of 1120. We have salary and wages payable of 210. We have unearned service revenue of only 100. And we have owner's capital of 3600. Okay? And that's the end of our balance sheet accounts. And it doesn't balance either. Again, because we haven't accounted for the net income. In this case, we stick it on the credit side to make it balance out, $230, and lo and behold, we have $5,260 worth of debits, $5,260 worth of credits. And that's how we correctly complete a 10-column worksheet. The hardest part is this stuff in here where we go from our trial balance, make the adjustments, and get the adjusted trial balance. Just have to be extra careful that if you had a debit here and you debited it here, you have a higher debit balance here. I hope that helps you guys get through that section of the homework.